Welcome back, and joining us for a look at the equity space is Imitiaz Suliman from Sentio Capital. Thank you so much for your time, Imitiaz. Quite interesting trading that we have seen on the JSE, particularly today. Started off quite nicely and then ended off in red territory. Do you think that this subdued price action that we've basically just seen throughout the week is maybe the markets letting the air out of the balloon?
Yeah, I think we had quite a bit of a strong run, especially in some of the domestic counters. But we still need some certainty on the political front, with the announcement of the cabinet. And hopefully that will provide, certainty going forward and direction for the market. But overall, it's been a bit of a mixed picture. We've seen some profit taking in some of the domestic names, which have certainly run up 10-15%. And I think you're just seeing a bit of profit taking on those names from an overall basis.
Well, could this also be one of those? Because I did see that JP Morgan released some of its stake on Capitec, where now they have 4.7% of its shares. Could this also be, the time for froth removal on Capitec? And I mean, even a stock that was seen as expensive even before the rally that was spurred by the GNU.
Yeah, I think if you look at Capitec, it always trades at much higher multiples than the local listed banks. And that has been, largely premised on the superior earnings growth that Capitec has provided. If one still believes that there's still more in terms of earnings growth, market share, them entering into different adjacent areas where, they're looking at the small and medium enterprise area as well, that earnings could still carry on for some time. So I think it's one that's particularly loved by the foreign investors. And with it doing so well, I wouldn't be surprised, as you mentioned, to see, some institutional investors taking some profits at these levels.
We'll talk about well-loved companies and sectors. The luxury goods market is usually one that is loved by investors because it really does shrug off some of the constraints that us normal consumers experience, of course, seeming quite defensive. But looking at De Beers, it released its fifth cycle rough diamond sales for 2024, and really seeing a trend that we have seen all throughout the year, where we've seen a softening in those sales. Is De Beers maybe looking like it's not participating in that optimism in the luxury goods market?
Yeah, I think the issue with diamonds in particular has been that there's been a shift towards lab-grown diamonds, which are much cheaper than naturally grown diamonds. And also from a consumer perspective, I think there's been a decline in demand for diamonds on an overall perspective. So whether that's been consumers looking to other forms of luxury, other jewelry items, soft luxury such as handbags, clothing items, some of that is playing a part in the shift of mix towards those items. And I think diamonds overall have just been under pressure because of other competitive forces, such as those lab-grown diamonds. But I think this is a typically weaker season for diamonds. It does particularly well in the December Christmas period, where there's lots of gifting, and sales usually pick up towards closer towards December. So I think it's a bit of a lull period that we're going through.
Just lastly on that, Imitiaz, I mean, we talk about the shift from naturally mined diamonds to lab-grown diamonds. And obviously, Anglo-American has said that it is looking to release De Beers. Do you think that maybe the headwinds that De Beers is experiencing right now, and just looking at the landscape of consumer demand, maybe it could make it a little bit difficult for them to kind of set it to the side or not?
Yeah, I think the two divisions that they've earmarked in terms of their restructuring process to be divested of is De Beers and Amplats. But if you look at De Beers, certainly that premium rating that the Anglo-American bought it out at is not something that they're going to realize when they do or if divest of it. So I think there's certainly there's going to be some pressure in terms of the overall value of De Beers. But nonetheless, they've seen it as non-core to their business. and something that they're going to divest in the whole restructuring process that they're embarking on to release some shareholder value.
All right. Well, Imitiaz, Rainbow Chicken has been listed, of course, from RCL Foods. Its shares will start trading on Monday. There seems to be a lot of excitement around this listing. I'm not sure if it's excitement around the actual company itself listing or that the JSE is getting a new listing. What is your take on that?
Yeah, I think we've seen the trend of delistings over the last number of years out of the JSE. But although this technically is a separate listing, it's coming out of RCL Foods, which is a listed company. But nonetheless, it provides an investor exposure to the chicken business and the agribusiness in a direct fashion. So I think overall, there's another competitive here for Astral, which also is in the chicken business. And Rainbow was listed at one stage, got taken over by RCL Foods, and it's coming back to the market. So it's a bit of a reversal and a good reversal out of the trend from delistings. But, we'll have to see how the share performs and what investor appetite is going to be. It's going to be quite small in terms of its market capitalization, which makes it a bit trickier for some of the bigger institutional investors to invest into a Rainbow Chicken.
All right. We'll talk about investor appetite. Where do you have your appetite in terms of your stock pick for today?
Yeah, I'm going with Omnia Holdings. Omnia plays in the mining segment as well as the agricultural segment. And they've done very well in terms of increasing their margins, especially on the mining side of the business, by selling higher margin products. It's a very well-run company, generates good cash flow, and usually they do pay out a special dividend and do share buybacks. If you look at it from an agricultural perspective, as the season progresses, and we should see an increase in planting of maize in particular going into the second half of this year and first half of 2025, that bodes well for some of the products that Omnia supplies. So I think overall they generate very good returns. It's trading on a PE forward P of 8 with a dividend yield of 7, which is very attractive. And I think there's still some decent upside from the likes of Omnia.
All right. Well, thank you so much for your time and for your insights there on what has been moving investors' money today, Imitiaz. That was Imitiaz Suliman from Sentio Capital.